It's not about picking stocks. It's about picking the right portfolio.
You talked about this a little bit, but for those who are new to Hedgeye, or those who might have just come into some money because of a bonus payment or whatever, or because we just didn't buy some of the big winners. You love riding the winners, but let's say I'm now coming to the party today, and I don't have a position in one of our big winners. How do you recommend that I go about building one after there's already been a big run-up?
And this is even a problem for you. Like Jonesy says this too. It's like you don't buy every single thing that when I buy it, right? You don't have. You might be busy. You have a job, right?
Well, first of all, I have a job, but we talked about this at the offsite yesterday, right? I mean, if you look at our position monitors across, and look, as employees, there's a lot of these things that we can't trade, but there are so many ideas and tickers that the firm has an opinion on. Like, I don't understand how someone could buy everything, but I wanted to buy uranium. I missed it. It's up big now. You keep talking about it. Let's say I want to build a uranium position. How do I go about that from here?
So that's I'm just looking at the answer, my friend, is not blowing in the wind. It is right there. So I'm looking at my portfolio, and this portfolio solutions is the answer, right? I mean, so uranium, and yeah, I get it. I mean, but I also understand this. I own every single one of these 34 positions. They are in my account. So it is doable, right? It is critical, though, to not buy something after it went up because you like the performance. That's rule number one. Don't do that, okay? So uranium, for example, Michael, is, of the 34, is in the bottom. I have URA, URNM are in, like URNM is 5th from the bottom in my portfolio. Today, if you see it go up, then maybe that's the day, but it wasn't yet. It wasn't yesterday. So, because it's so close to the top end of the range. Whereas, so I already used the example. So the answer is simple because I already gave it. But I mean, if you look at the top two movers to the upside, and we show it that way. We show. I don't know if you guys can show, the positions in terms of how they move up and down in the Portfolio Solutions product. But the number one mover to the upside, if you don't own it yet, is GLD. All right, that's number one. Number two would be India, and number three would be utilities. Those would be the top three because they're at the low end of the range. So if, and it's 100% EWA, it's new. So it went right up to the top because it was down at the low end of the range for 2 days in a row, okay? So that's really the answer, is that you wait. Do not just come in. Jamie Bruno, I hear him coaching new subscribers through this every day, which is no. How he answers questions is great. He's like, no. Because you can hear on the other end of the phone, people are like, so did I just put this portfolio on today? He's like, no. It's when you get into a position, he always says, shouldn't be different than when Keith adds to a position. But if you miss a position, you just got to deal with it, right? No is the answer on chasing something because it worked, okay? So that's, is that a simple enough answer?
Yep, that's a simple enough answer.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.